Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor and I'm the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content. Now we had a small break on the channel as I've been away on holiday, but we are back today to give you some more great value. For today's video I'm going to be running through a gold market which has been under some serious pressure this month. And I'm going to quickly run through the reasons why this is the case and what the outlook now looks like for the rest of August. Then I'm going to move on to the chart and tie it all in with the key levels to look out for. So the market saw a 2% or a $40 drop in just one day on the non-farm payrolls event this month, and the US economy added nearly 1 million jobs, which also pushed the unemployment rate down actually. And as a result we saw this spike in yields, we saw that stronger dollar coming through, and so we had that real drop in gold. Now what should be noted here is that if interest rates rise because of an economic factor, which is showing a stronger economy, i.e. employment figures, it tends to have a negative effect on metals such as gold. However, if the interest rate increase is due to inflationary pressures, then the effect is nowhere near as strong, and it's actually been proven to have a positive effect on gold. So let's take a look at Friday's data. This is last Friday when I was away, but I did check the data still. Now the data release said that consumer sentiment dropped to its lowest levels since 2011, and the Michigan consumer expectations for August were 65.2, while the Michigan consumer sentiment was 70.2. Now this data, coupled with expectations that the Fed are going to introduce asset tapering and interest rate hikes earlier than expected, this is an inflation related factor. So that's why we've seen this boost in the metals so far. And this is food for thought for the rest of the month as we have these big events coming up, which I'm just going to go through now quickly. So investors will now await the Federal Reserve Chairman Jerome Powell's comments at a virtual town hall meeting with educators and students, which is today. More importantly, tomorrow and Wednesday we have the FOMC meeting minutes from the last Fed policy, which is going to be released on Wednesday. I think it's about 7 o'clock in the evening GMT. Investors will look for hawkish language and for comments on expected inflation. I would highly recommend listening to the comments coming out this week, as we may see continued dollar strength continuing to put pressure on gold. Now, I believe the Fed is clearly signalling it will announce a taper in September and begin reducing purchases in October or November. Now, this is a lot faster than the market expectations. Okay, so looking on the chart for gold, I mean, we're in such an interesting position at the moment. There's a few things which I want to go through. First of all, I want to zoom in on the price action. This is on the daily chart. Because if we look at the most recent price action, we can see that we're starting to form a bit of a downtrend really. And you can see that what we've had is we've had this moving average cross where the 50-day moving average has crossed down and below the 100 and the 200-day moving average, which can be a sign of bearish pricing to come. Now, what I'd like to note for the daily chart, the most significant level for me would be somewhere in and around this daily order block here, because you can see the price actually come and run and broke this structure low here, which is quite a significant low really. We're talking about daily. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Daily charts at the moment. We had this huge rundown, and I am skeptical of analysing it because it was from the NFP, which as we know is a very volatile event. But still, this is the price action we have at the moment. You can see we're now starting to approach this daily order block. And what I would actually like to do is I'd like to just reduce that level to something like this, and the reason is because we have this 200-day moving average, which I think may act as a nice resistance level as well. So what we could have a situation where potentially we could have a sell limit at around 1805 with a stop loss at around 1815, and aiming really for Potentially this low here, ignoring this wick, and I'm going to explain why in a minute, but maybe aiming for around a 9R trade, which would be a very good risk reward ratio as well. What I want to notice, the reason I'm not aiming for this bottom here is I think this was a stop run and a catalyst for prices to move higher. I was actually away at the time this happened, so I couldn't actually catch the buying opportunity. But you know, we've had this double bottom, and I've mentioned it a few times before. Well, you can see now that this seems to be the swing low for gold. We have another one down here as well. So there are market structures low, and you can see exactly what happened on the 9th of August. We had the market run down and threaten to break out of these lows, these structure lows, these real important swing lows. So much liquidity would have been sitting below these lows, and the price just wicked below and shot back up. And if you watch my video on trading false breakouts, you'd have had a great buying opportunity, potentially to catch the retracement up to more of a fair value level. You can see as well at the time the RSI indicator did indicate all the way down at 25 at oversold territory as well. So for me, I think this is a great risk reward ratio for a selling opportunity for gold. If I just touch on the 4-hour chart as well, the 4-hour chart may offer something a little bit different. I'll keep the markings there on the daily, but I just want to quickly note that we probably, if you're looking to trade the 4 hours, say this trade does get stopped out, you could look to re-enter potentially at a level up here. The stop loss is a little bit bigger, but again, it might be a safer level. The only way really we could see price breaking through and above these highs that we see here, then we start to look towards 1850, is if maybe the Federal Reserve don't have the desired, or don't release the desired comments that we're expecting in the FOMC minutes on Wednesday. And you can also see that normally I would have said for you to potentially trade the fair value gap that we have here, but as you can see, this has now been filled, and we may even get a reaction today from this 200 moving average on the 4-hour chart, considering we have the RSI in overbought territory there. However, my favourite play, my play of the day, should we say, is trading off of this daily order block, reducing the limit to respect the 200-day moving average, have a reaction there, maybe aim for around this low here, ignoring what happened here, because I think this was a trick on liquidity. So that's it for today, guys. I hope you all enjoyed our video where we're welcoming back our gold analysis. From now on, we'll be doing these videos 3 times a week, mainly on analysis for the next couple of months. Gold, silver, oil, NASDAQ, anything you want us to produce a video on, we're happy to do so. We know these videos on gold and silver are the ones that you like, so we'll continue to do these as well. I'd like to thank you all for listening, and keep liking and subscribing to our channel and boosting our channel as we look to get back on track with all our videos. Cheers guys, have a great day.